this very special edition. We are speaking with Andrew Holland, CEO of Avendus Capital, joining us live on the show. Andrew, good to have you on the show. Thank you very much for taking time out. And it's good to have you back, actually, after 2023 for the very first time on Newsline Live. I want to begin by asking you, sir, what is your outlook for 2024? The markets have, in fact, done well, not exceptionally well, but have done well at the start of the year. And you actually talked about that. You hinted at that in 2023 when we had our last conversation. What sense are you making of the markets going forward, sir?
Well, I think we're all hoping for more of the same, right? So, for most of the year, the kind of market last year, the Nifty was only up 7%. It was only the last 2 months, the Santa Claus rally that we all had, which got us to where we are today. And that's followed through to some extent. And I think that, we got into a little bit of overbought coming into the year. And that's, I think we're probably going to trade in a range a little bit. But the good news now is that with these IT results coming out, I think the market's going to say, you know what, those results weren't so bad. And we think it only can get really better from here, because if interest rates are falling globally, it's good for tech stocks and you get that extra tailwind throughout the year. So I think with that, and obviously the recent kind of surge in the Reliance share price kind of bodes well for the market to start thinking. I think earnings are going to be okay. I think we've got the catalyst to kind of move the market towards that 22,000 Nifty. The only sector which is kind of still playing spoilsport to some extent is banking. But maybe there's a bit more confidence now with these IT results. Again, just giving the market that kind of extra step in terms of trying to push higher. Lots of things out there which are risks, which I'm sure we'll talk about. But I think in the very short term, I think the market has the momentum now.
All right, and since you talked about a plethora of sectors as well as the IT results that have started pouring in, Andrew, of course, not too bad when it comes to IT, Suyash, is it? The IT results for Infi TCS out at the moment, and the preview, apart from what the preview was, the results have been in line with the preview, in line with the expectations. The stocks as of this morning are up.
Yes, Shweta, absolutely. And I think the street was overall factoring in the worst, and the numbers came in slightly ahead of what the what the expectations were. Although we have still seen a decline on both sequential as well as on a quarter-on-quarter basis. But early morning on Friday, we saw a big surge in IT stocks. They are up somewhere around 4 to 6%. Andrew, coming to you, what's leading to this exuberance?
For the IT stocks, I think I think everyone had a negative view. I mean, we've been saying that, listen, the valuations were okay, but obviously the guidance has been weak. The kind of outlook was weak. And they all came in with results which were slightly ahead of the kind of more pessimistic scenarios. And again, I think everyone's thinking now that, we're probably hit towards the bottom. It's not going to get worse from here. Let me put it slightly differently. Let's talk about the inflation figures in the US yesterday. So, they were higher than the market expected. But the market say, you know what? We're going to get rate cuts this year. It doesn't matter. It could be March. It could be June. And I think that's the feeling now with the IT sector, is that you're getting towards the bottom. So from here, it's going to move higher in terms of demand, throughout 2024. So we're through the bottom. Results weren't so bad. So now it's a sector which has been slightly unloved for some time, but now you have the momentum to push push the stocks higher. I'm not saying that you're going to get upgrades to earnings, but I think that's the next stage, probably in the first half of at the end of the first half of this year.
And as far as the top 4 or 5 IT companies go, your Infosys, TCS, HCL, Wipro, what would be your pecking order?
It's difficult for me to talk about the individual stocks in terms of pecking order, but I think it's going to be initially led by the large caps, but you'll get the mid caps as well starting to probably outperform in the second part of the run up in IT stocks, what I would see. But I think the beaten ones down has been the large caps. I think that's where you're going to see the kind of very sharp moves which you're seeing today, because there's been too much pessimism.
And talking about the inflation print, the headline inflation print that came out on Thursday for the US, that came in slightly hotter than what the street was expecting. Now, my question is, how does that factor in that entire rate cut narrative, and by how many rate cuts and by how much quantity you as a group are factoring in for the US this year?
So we're factoring a minimum of 100 basis points. We're also factoring in there that March would be the first time the Fed would reduce rates. Now, data is showing that that could be pushed a few months in there. But what the market's saying is that actually not what the market's saying. What the Fed is saying is that we're done. Interest rate reductions are coming. Now, how many times, how big? I think the market's factoring in at least 100 basis points, throughout the year. So whether that's 25 in March or 50 in June, let's see.
All right, and are you expecting the central bank in India to also follow suit perhaps? And if yes, what sort of trajectory are you looking at when it comes to RBI?
So, if let's just take the view that, interest rates fall by 25 basis points in March, you could see the RBI at least do something in April. I mean, I wouldn't be surprised. In fact, we could actually be one of the first ones to reduce rates because, inflation figures here are trending down. Commodity prices are, fairly stable. So it doesn't necessarily mean we have to wait for the Fed. But I think it's always a good signal for other central banks, including the RBI, to kind of take the lead from the Federal Reserve and reduce rates. So it'll be very soon afterwards.
All right, and since we are on the US and the impact that's going to have, let's also talk about the US-UK strikes on the Houthis as of this morning. Now, that news would be some sort of relief to people, shipping companies specifically, and the trade volume that moves through Suez Canal that has taken a beating in the past couple of days, down by about 61% past the Houthis attack. What sort of momentum, and the oil also picked up 2% just this morning. What sort of impact do you think it will have on oil prices before I come to shipping costs that have also touched an all-time high, an exorbitant price at that? But what sort of impact are you expecting on oil?
So we'll have to see how if it escalates at all. I mean, obviously it's a worrying time, not just for obviously the shipping routes, but also for inflation. If the oil price does rise a lot more, but it's not been a big rise, right? It's really just recovered some of the losses it had prior to this strike. So it probably tells me that the market's still saying it's okay. There's nothing to worry about right now. I think the problem will probably, for inflation, will probably lie more towards Europe than it will anywhere else.
Okay.
A little bit in the US, but more towards Europe. So, there was a feeling that, the European or the European Central Bank, the ECB could, do rates again quite quickly. This might delay it if this problem in the Suez Canal continues.
And what do you think would be the impact for us? Because at the end of the day, we are net importers. We depend on a lot of raw materials for at least heavy industries as well as oil. Overall, what do you think, if the crisis persists, what would be the impact for the Indian economy?
So obviously it will have an impact in terms of raw material prices, kind of increasing for the input costs for a lot of industries. So that would be the first fear. The second, obviously, more importantly, is that our exports might slow down as well, because anything to Europe is going to be affected by this. Maybe not on the price side of it, but in terms of actually shipping the goods. So I think a double whammy in terms of the inflation part of importing, because it's going to cost higher cost. Now, is that going to be passed on, or will companies take it in their margins? We'll have to wait and see. But that would be the risk I see at the moment. But at the moment, most companies are not putting this into their commentary in terms of problems for them in terms of margins.
Right, and you mentioned it's going to be a double whammy for India, both imports and exports taking a beating. Exports taking a beating to the tune of $30 billion. That is the expectation if the current crisis continues. Hopefully, that crisis will now be, you would now come to a stop post the US-UK strikes on Houthis. But one of the important news stories that has in fact led to a lot of jiffy in the market, especially in cryptocurrency, is the fact that US SEC has finally given a go-ahead to spot Bitcoin ETFs. What sort of impact are you expecting, not just for the US, but also for Indians who are hoping to now perhaps invest through, maybe funds of fund or making a foray into cryptos for the very first time through Bitcoin ETFs?
Yeah, you see, I mean, the RBI is obviously, we saw the statement yesterday in terms of, their view is a little bit more negative on crypto. So I think locally it's going to be more difficult to kind of participate in this expected increase in the Bitcoin generally. But I think, you have to be very careful in terms of some of these themes that play out for Bitcoin. ETFs has been something that has been talked about, and I don't know if you noticed that the price has actually come down since the ETFs has actually been traded. So, you will get that kind of sell on the news part as well. So it's been expected for some time. It's good news for Bitcoin, but it's just an asset class which it's an alternative asset class which you would only put a very, very small portion of your funds towards, because there's other alternative assets which would be equally as good in terms of the returns over a longer period.
All right, and not a safe asset class, is it? I mean, that is the question a lot of investors would be wondering in at this point. US SEC making it very clear it's not safe. It's not an endorsement from the US. Don't look at it that way. And in fact, RBI governor also coming on record suggesting what's good for others may not be good for us. So don't venture out just as yet. Try and be as safe as you can.
All right.
Exactly. Listen, if you've got our markets which are doing so well, I would say that there's plenty of money to be made in the Indian markets rather than just Bitcoin.
Absolutely.
All right, and overall, Andrew, India has been a relative outperformer. We have been on a bull run for the last 8 years. In fact, in 2023, we outperformed most developed and emerging markets. I have two questions here. What sets us apart, one, and do you expect this outperformance to continue in 2024 as well?
See, I think there's two parts to that in terms of the outperformance. Let's take two factors. Let's take a factor which would mean that we don't outperform as we have done. And I think that is very much dependent on what happens in China. If China does a big stimulus, which brings confidence back to that property market and to investors in the property market, then I think you could see a lot of flows go towards China. It's a cheap market. It looks as though it's kind of bottoming out from where it is. So, you could see that would be a big positive for them and take flows. Not saying necessarily all from India, but towards China. So that would mean that would be a better performing market going forward. If we take that interest rates are falling in the US because there's a slowing economy, and we keep debating whether it's a Goldilocks, no landing, or it's more of a recession, and we're in the recession camp, then again, the markets will look through that and say, who would benefit as the economy recovers going forward, as interest rates, come down, and that would obviously be the exporters. So that would be your Koreas and Taiwans and Chinas. So I think that's probably where you could get outperformance from those markets compared to India. But obviously after the elections, if we have a stable government and the policy reforms are exactly as the market's been expecting, then what I would expect to happen is that GDP growth will start to accelerate, and that will have a multiplier effect across many different sectors. So I think earnings will start to increase, or earnings forecasts will start to increase. So our kind of base view is that earnings per share will rise by 15% in 24-25, and that's probably the kind of level of increase that we'll see for the Nifty as well. So not a bad ending in terms of the result for the year if that proves to be true.
And what's your view on the broader markets? Now, they have rallied, and how the Nifty Mid Cap 100 and the Small Cap 100 Index, they rallied by somewhere around 50% or so in the year gone by. So far, even in 2024, they have been performers in an otherwise choppy market. So can they continue to shine, and what sectors or what pockets offer opportunity in the broader markets?
So I would say that the rally that I would expect to see would be led by large caps. So because if you're going to get foreign investors coming in, they're going to go for the large caps initially. So I would say banking, IT, and metals would be the three sectors which I think will lead this rally going forward. In terms of the broader market, I think I would kind of look at themes rather than just say small or mid caps. And some of the themes obviously would be not dissimilar to what we saw last year, which would be defense and renewable spending. That's not going away. That will continue. But the themes that we liked last year, I think, are still at the beginning of the runway. This premiumization in beverages, both non-alcoholic and alcoholic. We think that's going to continue. Going forward, and this whole spending in terms of experiences, so travel, leisure, again, is going to be you're going to see a lot of more spending, and with Prime Minister Modi obviously saying spend in India, I think that's helping the cause for all the hotels and islands as well. The final sector is the electronic manufacturing sector, which again, very early days in terms of the growth for these companies, both domestically and for export. So I would look at these as the themes I would play in the kind of small and mid cap sectors.
All right. And what's your view on the banks, especially the private sector banks? Now, they have been the laggards for the past 12, 15 months or so. Now, FIIs are finally back in the picture. They have returned back to the Indian markets. Can that provide a bullish pivot for the banking stocks?
I can. I've been again scratching my head of why this underperformance is still there. Initially, it was obviously because of the RBI's worries over unsecured loans. We saw some tightening of the regulations around that. So either something else is coming from the RBI because they're still concerned, or the NIMS pressure because of high deposit rates that all the banks are chasing is a little bit more severe than the market was expecting. So we'll have to see what the results in the commentary is. But there's something is either something I'm missing, or there's a bit more pressure on the margins than we were hoping for from the last set of results. But that would be the catalyst for the banking sector to outperform, as if that pressure on margins is not as severe. So similar to the IT sector, if we start to see the results are okay, I think the banking sector will take the next lead of the market higher.
All right, and since we are at a very crucial juncture in India at the moment, there is a clarion call to invest in India, especially on the back of the fact that firstly, budget is around the corner. This is an election year. Let me first pick your brains on budget, Andrew. What are your big expectations? It is an interim budget, so obviously, we're not going to wait with our bated breaths as to what sort of announcements are going to come in. Many are saying you may call it interim, but it's actually the final budget because the government is very sure it's going to come back. The ruling government will come back. Now, investors have been told by the ruling government, don't worry, we're going to come back, keep investing in India. But for budget specifically, what are your top picks for what's going to happen in the budget? What are your expectations from the government at this point?
Again, I think it's more of the same. I mean, I wouldn't want them to kind of do anything more radical than they have been doing, because government expenditure across broad range of sectors, they kind of move towards helping electronic manufacturing sector, I think, will continue. So, these kind of schemes, I think, all bode well for bringing in foreign direct investment, as well as obviously investment from our own companies in India. So I think if they just continue along this path, that would be great. The one thing that I keep hearing more and more is maybe something towards capital gains tax on stocks. They had if you remember last time, they did something on the bond side. So that's something that we have to kind of be aware of if they're looking at trying to not equalize the tax, but at least getting the tax kind of differentials a little less than they were.
All right, and I'm assuming that with this being an interim budget, just prior to elections, I believe capital gains tax may not be happening just this time around. Perhaps it's going to be a wait and watch on that one. But, you know, before I let you go, as I mentioned, election year, how are you and what are your suggestions to investors at this point in time? What should their portfolio be like prior to elections and post-elections?
And also, if I could jump in over here, if BJP loses, what sort of a correction can we expect at the stock markets?
You know, we've had that, let me think, wasn't that surprise back in 2004 when they lost the elections? Didn't the market fall quite significantly then? What I would say was that if that was the case, then between 2004 and 2008, you had one of the best bull markets for a very long time. So I don't think whoever gets in would change the policies or direction of the economy that quickly. And I think all the great work that's been doing in terms of government expenditure, I think will continue to help the economy grow at that kind of 6 to 6.5%, at least for the next few years, and then accelerate from there on. So, you know, I would look at it, any kind of opportunity of the market falling because of whatever reasons are political, would be an opportunity, you know, to buy into the long-term stories of India.
Okay, an opportunity this way or that way. It will be an opportunity when it comes to Indian markets. Andrew Holland, thank you very, very much, sir, for joining us here on Newsline. Always a pleasure listening to you.